India's real estate growth story is unabated. It's been gaining momentum with every year passing. We all have now heard and known about how real estate, city after city, market after market, has been gaining momentum, gaining traction. The premium luxury end of real estate has been doing really, really well. Government has been pushing a whole lot of action around the affordable segment through PMAY and other such incentives. There's another side of the real estate which often is overlooked, which is the commercial side of real estate. The commercial real estate, whether it's about the retail part of it or whether it's the office and infra part of it, this has also been growing very well. It has seen the emergence of global capability centers, for example, aiding it. A lot of infrastructure development happening, including new airports coming, say, for example, in Navi Mumbai, in Noida, and many other parts of the country. A lot of these infra developments, alongside, of course, there's a massive construction of roads, highways, and other infra developments. All these give build opportunities for commercial activities to happen, and therefore demand for commercial real estate. Today we are going to discuss what is happening on this side of real estate. And if you are an investor looking at investing in real estate, commercial real estate traditionally has been giving far higher returns as against residential. Is that the case even now? And what does the future hold? What is happening to this side of the business? Today we are going to discuss a lot of these things. We have got an excellent panel of experts here. Namaskar, I'm Prasun Kumar and you're watching this new episode of The Property Show on MBTV, world's largest real estate online channel. To discuss commercial real estate, I have got two extremely seasoned players today. We have got Mr. Angad Bedi, who is the Chairman and Managing Director of BCD Group. It's India's oldest and one of the largest construction and design firm with footprints across globe as well. And we have got Mr. Rahul Sareen, who's co-founder and CEO of FlexLease, which is an office infra solution provider. He's based out of Gurugram. So thanks both Rahul and Angad for joining. Let's start this discussion by really helping our consumers understand a bit about the opportunities that are there around commercial real estate, and what are some of the things that are happening at this stage. Let's start with you, Angad. Since you have been constructing a whole lot of these real estate infra and solutions, what is the action happening really in on the commercial side?
Thank you, Prasun, and thank you for having us with you on your show. And indeed, today is the India growth and shining story all over. In past decade, post since COVID, everybody has seen the turnaround of this sector, which every year people are thinking was going to slow down, but year on year it continues to be bullish and in a growth trend. Given that the way the housing index has stabilized, infrastructure in our country is growing, as well as today we have got a very high job creation in manufacturing as well as industries. And what has led to the capitalization of the markets is that the global FDI, which has got the international companies coming in into India to make GCCs as well as commercial office spaces, has led to a lot of real estate commercial assets which were previously not being leased, or there was a slowdown during the COVID area, having come at 80 to 85% of absorption capacity. But Pune, Hyderabad, Chennai, catering to global Fortune 500 clients, as well as people who are putting in their back end offices, as well as APAC headquarters in India.
Okay. So you see action all around. Rahul, you have been on the other side of the business where you have been looking at fitting the constructed building and providing a wholesome kind of moving in solution to offices and brands and businesses as such. What kind of action you have been observing happening on the commercial side?
Firstly, thank you for having us on the show. It's great to be there along with Angad. So I think, like Angad said, I agree with him that the action is evenly distributed amongst more than one cities across India right now.
Hmm.
Uh, you know, it's just not cities like Bangalore and Hyderabad contributing to it. It's
Hmm.
other cities like Chennai and Pune, and then cities like Indore,
Hmm.
Ahmedabad, who are also now significant contributors.
Hmm.
Uh, and like rightly said, there are a lot of global capability centers
Hmm.
who are coming into India, and they are setting up the shop, and it's very evenly distributed. I was talking to somebody the other day. One of the things that is again going to give a lot of push in India is the semiconductor business, which is going to come into India.
Hmm.
So you'd see a lot of cities like Mysore, cities like Chennai, where you see a lot of growth. So
Hmm.
it's I think for the commercial real estate, next 3 to 5 years they are going to be very very interesting.
Hmm. I take an interesting point from what you said, which is really an even distribution of opportunity there, where even a lot of tier two towns are now becoming a major play as far as commercial is concerned. How are you seeing this? I mean, is this something which is going to be there? Are you seeing the tier two town opportunity as a big opportunity? Because of course, a lot of tier two, tier one towns have also saturated, right? So if you look at Mumbai, if you look at Delhi, if you look at even Bengaluru, or a lot of big cities that we have, the development now is on the peripheries or beyond, right? And therefore they are actually different cities in a way, right? And because of the infra development, a lot of tier 2 towns are today very well connected, and that's not an issue. Do you think this tier 2 town opportunity is now a big opportunity from an investment point of view for someone to look at?
Yes, certainly. What COVID has really taught us is that you don't have to be in a metro city to get your work done. So, also the other thing is the talent pool. I think that's very very important to understand that how the talent pool is spread across the country. There are zones like Hyderabad and then suburbs where you would see a different kind of talent as compared to cities like Mysore, and then altogether, cities like Jaipur. They offer you a very different and a diverse kind of talent. So what we are seeing is, and I'll tell you the trend which is coming is from a lot of large clients. These are very large multinationals, very large consulting firms who are reaching out to us and asking us to look at fit out leasing in tier two cities. Cities like Indore, cities like Vizag, Kochi. It's very very interesting. So I definitely see that from investment perspective, this is a good time to look at those cities as well, because there's only so much that a Mumbai or a Gurgaon can offer, right? Uh, Ultimately, people will have to move out and people will have to look out for other places with the right combination of infrastructure. And I think a lot has to be said about the policies which have come into the picture. A lot of supporting policies have been rolled out where you would see these smaller cities coming up.
Hmm. Yeah, and Angad, the point that Rahul makes, which is about tier one towns having only as much capacity that they can support, and tier two towns also have an added advantage of being low cost at this point of time, because there is a certain cost associated with a Gurugram or a Mumbai real estate now. A BKC cannot be affordable for everyone in a way, right? So tier two towns emerging therefore, and at a certain cost. Therefore, the ROI probability of an investor would be far higher, isn't it?
Predominantly, if you look at it, for the past 3 decades has been the commercial story. It's only in the 1990s when really the Indian commercial and residential story which started. And if you look into the late 90s, there was no Gurgaon, there was no NCR, it was only Connaught Place, there was Bandra, as well as there was MG Road in Bangalore. And the decade which was from early 2000 till 2013, which was the first decade, which kind of expanded into Gurgaon coming, Noida coming. The past decade, which is 2013 to 15, 2025, which has come in this, the phenomenal growth which has happened in the last decade precedes the past 7, 8 decades which the country has seen. And that fast catch up is aware in terms of the new Jawar airport which is coming in. Like the city of Bangalore, which has got a airport which is newly built in 2009, they're already planning a second airport as soon as it's out of the non-compete clause. The horizontal expansion of every city is already peaking out. You've seen how Bandra today has been redeveloped already into from an old complex into a new complex within the past 3 decades. That is how fast urbanization is catching up, and the prime areas are requiring to get refurbished or being rebuilt. So, this story, which is already exhausting itself with the horizontal outreach end to end, with aviation catching up pan India in every of the major cities, the natural outflow and the overlay is going to be into the tier 2 towns. Yes, Indore, Raipur, all these places are going to have their own micro markets for commercials. But what I'd like to be emphasizing on is that comparatively versus a Bangalore, Hyderabad, Pune, Nagpur, Indore, Raipur is equally priced as a commercial asset, wherein our range of residential assets is in the 7 to 10,000. There too is about a 8 to 10,000 resi asset, and similar parity for an average to average. These three towns, which we hear more of, are comparable into the tier 2 city pricings, wherein the land cost is not high. Construction costs are fairly lower given the cheaper availability of labor and cheaper cost of other raw materials. The sale price and capital values are phenomenally high. So there is a lot of buffer which the people are enjoying in those markets and they are maturing. But as competition will build in and established players will start going and building bigger capability or IT centers, I think we will be seeing a lot of expansion over the next decades into these areas.
So this might be the right time for investors to get into, isn't it? Real retail investors.
Absolutely, I would say it would be the right time for all the developers to jump into all these territories.
Of course.
Rahul, one thing is also that given all the geopolitical uncertainties that are there, right, and that impacts businesses a lot, especially global MNCs and businesses which have global footprint. They also want to hedge risk, right, and with rising operational costs and all such pressures around. How do you see, therefore, this shaping up in terms of leasing and in terms of fit outs and everything else? Do you see a certain trend emerging there, which is going to stay, where companies would want to hedge a lot of risk? And how will this entire piece play out?
So I think the hedging is already happening. You see the trend, how it's been, working out for last 18 months. A lot of this is one common thing that we are seeing is that across these large MNCs, so they are looking at a smaller area and a smaller lock-in. Where they're getting the investment done on. In fact, they are working closely with operators, either who are co-working players or who are managed office players, rather than taking a conventional space and then building it up. They're looking at a 15 to, and very interesting, it's from 15 to 20 months kind of a lock-in is what they are offering, and they're doing trials for these smaller cities. And as and when they grow, they're adding up space. But one common thing which I'm seeing in the market is that none of them, they're looking at investing in these assets. They are looking at operators who can invest on their behalf, uh, give them a fitted out space. Now this is very interesting because a lot of investors, a lot of landlords, they're doing that for them. So they are investing in that space. They understand the ROI now. So see that trend shaping up in a lot of cities. So it's just not the I would say structured managed office players or co-working players. It's rather it's gone to a zone where everybody is turned out into an operator, and they are investing in the fit outs. They're investing in the space for these large clients. Uh, and as far as the clients are concerned, they have hedged their risk by taking a very small lock-in period and getting somebody else to invest and offer them a plug-and-play service.
Okay. So, Angad, then I would want your perspective on how can a retail investor get into it, because this is the right opportune moment. I mean, there has been a because there are high ticket investment opportunities over there, and for that threshold to go down, there was this the entire concept that got worked out, which was around fractional ownership and so on and so forth. How do you see some of these trends emerging, and what are the avenues, opportunities that you see for investors to get into commercial then?
So basically, real estate, anyways, in today's time is an illiquid sector, and commercial as a business is particularly very cumbersome in terms of capital requirements because it requires right from the land for the building to come up, wherein the customers come in at time of leasing and liquidity comes out at times of exits. So it requires a lot of investments in terms of individuals, developers at an initial stage before inflows can come in. This, in fact, makes it a very exciting opportunity for the investors who are coming in at a late stage to be packaged and be given early stage deals. So they are, in fact, taking the return on the cost of capital coming in early, plus an override on the risk because if somebody is coming in pre the project versus post the delivery, the pricing also has a dynamics apart from the cost of finance. So if the investors work along with the developers and the reliability, but post sanction stages, if they are able to come in terms of early stages, I think the sector is a gold mine for them to be coming in at a lower capital value and taking rents at the value once it is leased out. Thereby, their return on capital can cross almost a double digit, close to 20s number as a return on investment. And unlike any other asset class, which gives you a yield as well as a capex appreciation, I think it becomes very exciting for investors to come in. Based on this cues, people in the strata space have come up in terms of selling it floor by floor or unit spaces, is to use this gap within the sector as a business opportunity to be able to give investor returns. But if there was some sort of a broader regulatory framework which could allow them to participate pre early as people invest into residential assets more seamlessly, and then in the commercial sector, I think we will see a euphoria of increase of the buildings which are going to be coming up in the foreseeable future.
So, as at the helm of a large construction firm, constructing a lot of these commercial entities that you're talking about, what are the emerging trends that you see from a tech point of view, from sustainability perspective, from design perspective? What are some of the new things that are coming?
So, if I was broadly to break it up into three aspects, first, today post COVID, timelines are extremely critical. People are very sensitive on the start date of the project and end date of the project. So they really have revamped onto the construction technologies in terms of the shutterings, in terms of the methodology, in terms of the equipments which are being used to deliver it before time, because they understand by the end of it, overhead delay is the killer of the project. So we are seeing a lot of maturity coming into the construction industry from that angle, given that people are planning their cash flows properly initially so that the project can be run seamlessly. The energy and sustainability are big things which are being done today as a design into the buildings because any Fortune 500 companies which are coming in are sensitive to having a LEED certification, to a platinum rating, or to a green and sustainable building. And they are looking into these criterias at the time of lease apart from the design.
In fact, India has the world's fourth largest depository of LEED certified commercial buildings in the world. That's quite a lot.
Excellent.
Yeah.
Yes, absolutely.
Yeah.
And thirdly, I would say is there is a lot of efficiency and well planning of spaces which is being put into the thought. Earlier, it was building of square footages. Now, I think everybody is looking at building very curated experiences and areas that they are seeing from the customer's point of view. That when he is coming in as an office space, it is not only to just keep him under a shed and give him a desk, it is also to give him experiential office environment, which then enhances productivity and also enhances your need to come to an office space vis-a-vis trying to work from home. So all of these factors have been a recent change, which we as a contractor also are seeing in from the execution time of it. A lot of financial discipline, timely deliveries, well-planned buildings, and a lot of efforts into MEP design as well as sustainability.
Okay, Rahul, from your side of the business point of view, then these trends that Angad spoke about, which is about actually delivering a differential stroke superlative experience, so that workers are more interested in coming to office than working from home in a way, right? And also the sustainability solutions that are going in now, apart from technology and everything else. How much of this is now increasingly playing a role in terms of when you are looking at fit outs and the entire this side of the business?
Yeah, I think as far as ESG is concerned, that's become like a norm now. We're talking about Fortune 500 clients or large multinationals, or even for that matter, even the large Indian companies and even the PSU firms. Even they are looking at ESG as a very very integral part of building up the office space. That's one. But I think the most important point that Angad also picked up is how do you get the employees back into the office? Because one thing which COVID has shown everyone is that a lot of people have they're wanting to work from home even now, but now a lot of clients are not wanting that. They're wanting the employees to come back to office, and one of the most interesting ways or compelling ways, and even to cater to attrition, is how can you build up an experience for your employee that that compels them to be in office, even if it is hybrid. They come, let's say, 4 days a week or 3 days a week, but that experience itself has to be so compelling that they are drawn back to office. So what we are seeing is that when these requirements come to us, a lot of attention is being paid to this aspect, whether how much of biophilia are you adding up to the office space, are there enough plants put in, is there enough sunlight coming in, are there more collaborative spaces rather than you know the old cabins or cubicles which used to be there. And clients are investing, even on a capex side. They don't shy away from investing in building up an office space that gives them a very good experience. So I think that's a thing of past now, that uh, office is just an office. I don't think office is just an office anymore. It is a lot more than that. It is more to do with how your employees feel about the office and how compelled are they to come to office.
Correct. And I think a lot of these changes are being driven by Gen Z now entering the workforce anyway. And, all of those who were born after 1997 are classified as Gen Zs. And, that's the generation which is born in technology. That's a generation which has a worldview on everything. And they're exposed to everything good that is happening around the world. And so, do you really see a lot of these newer things or futuristic things that are happening in say more developed part of the world coming to India faster than ever before now? And as you said, MNCs as it is demand a certain kind of standard any which way, but otherwise even from a basic requirement point of view, do you think this consumer cohort that is there is going to be demanding a lot of international standard working conditions, and therefore such solutions coming?
So I think with very very large multinationals have already built that up in their Indian offices. If you go around, large clients, and if you go around their offices, you'd see some very interesting stuff. Some of them, they have a core cut and they have slides coming in from one floor to another floor. Then you have a very interesting, buffet spread that they offer to the. It's even better than some of the five stars. Then reading corners, they are made very very interestingly. The play zones are extremely extremely interesting, and the way, in fact, even the way the bays are made these days, the workstations, the way they are made these days, it's very very different. And I don't think it's just the Gen Z Right now we're tackling a larger issue is how to bring back people to office. See, that still remains a problem. A lot of large campuses still are not, occupied beyond, I think 40-45% of their capacity. So I think the Gen Z is a different, the aspect that you are talking about is very different than the infrastructure.
No, I also bring up that point because this is a generation and generation beyond this, who have seen therefore hybrid working conditions or anywhere kind of any place working conditions also working as effectively from a productive point of view would increasingly therefore be predisposed towards those kind of solutions, right? And so would that then present a challenge of sorts as far as commercial real estate is concerned?
I don't think that there's going to be a challenge as far as the commercial real estate is concerned, uh, because I don't see that correlation being there because of a certain degree of user set. But what I do see is that probably the attrition rate might still not be at its best beyond what somebody would expect. Uh, but the experience is definitely far better today. And I think what we've been told, and because we are associated with a lot of large clients where we invest on their behalf, so there are times when we only invest and we don't do the design and execution, and there are times that when we do the design, execution, and investment. So when we don't just invest, we are dealing with very large global players, who have, like you mentioned, they have different global standards that they bring into the countries like India, and then they set up the offices the way they set it up in a different country. I don't think infrastructure-wise, I see a challenge. Yeah, that's certainly that I don't see.
Okay, Angad, from your point of view, do you think uh, that it could impact the demand as such? Because ultimately, if a large organization allows 70% of its workforce to work from home or in a hybrid manner, the requirement for workspaces will obviously shrink, right? And the deal sizes will become smaller and smaller. Do you think this becoming some sort of a challenge to manage?
I think just taking away from Rahul, I would see it in two perspectives. The Indian commercial real estates, if assuming a Siemens has an office in Africa versus in India, or even in a Singapore, Indian commercial real estate today is at par with any campus in US, Europe, or any other part of the world in terms of the standalone campus. If you would talk to about it, we would not go into the roads and the external infrastructure outside around it. But as a same to same, I think the experiential spaces and the design are at par with any of those international standards. So there may be a challenge, but where I feel today is everybody is out of homes to go back to the offices. It is the traffic which becomes the deterrent of killing on the time space of the morning and the evenings, which becomes a roadblock. So if somebody is able to plan his accommodation or his living facility near an office workspace, I don't personally see anybody being wanting to crammed up to his home place, be going out and spending a curated day in an office. When today, like Rahul said, the people are giving out the lunches and meals and the F&Bs, which becomes a very, very valid pulling point as a crowd for these people to come in. And the Gen Zs and the Gen Ys are looking at that good cup of coffee in the office for their puller in the day to wake up and make that effort to travel that 40 minutes.
What is happening on the retail side? So on the commercial office spaces and that part we did discuss. On the retail side of it, what kind of action you are seeing in terms of new malls or shopping centers or such units coming up?
At the retail side of it, we are anyway seeing the massive success of the REIT of the, for example, like a Nexus REIT, which has happened. And if you look into the prospectus of expansion for any of the retail spaces, I think right from the forum, which was the one which was sold, and is looking into a next foreseeable future of breaking the records of bigger malls far larger retail spaces and more organized and enhanced in compared to the spaces which were earlier. So we are not seeing any slowdown as far as that segment goes. E-commerce, though, has its own category of spending, own category of consumers, but it is not making a dent into the retail spaces being built because that is for the experience. It is not for the end user shopping. And brands are still finding it cost worthy to have pilot shops in retail spaces, even if though may not translate into a per footfall sale into them as a revenue. But back end, when they go back home, the same thing is delivered by e-commerce online. So it is working in terms of just the indirect marketing in a very organized, positive manner. When e-commerce and retail are not eating into each other, I would think they are growing each other.
Okay. So both of you gentlemen are very very bullish on the commercial real estate and the future as such, the way you are looking at it. So in the end, tell me, Angad, starting from you, how do you see commercial real estate as a market evolving over next 3 to 5 years? Of course, as we grow from a 4 trillion economy to a 10 trillion economy and beyond. Real estate contributing a significant chunk of the about 50% of GDP coming from real estate and construction. How do you see this part of real estate shaping up?
I think just for the sake of the economy, which is 4 to 10 trillion to happen by 2030, the first trigger will be the residential gap, which is about, say, 20-25 million of users who are there as per bank data, is willing to take a mortgage and buy a home, but are not getting the unit of those spaces. And the developers are still launching year on year and seeing that phenomenon of a sellout during a pre-launch phase is an indirect aspiration of that today these people who are buying those spaces are going to be the new age customers looking in for their jobs, their growth, their work environments to be also growing along with them, for them to either be paying their EMIs or for their salaries, which is going to be the asset class of commercial. So I think one thing is going to feed to the other thing. It is not going to lead an investor to have a choice parity between a residential and commercial. I think both have their own appetite, both have their own way of getting in the investors or the customers into the game. But seeing the run up, it's not only the commercial. I think commercial is the catch up to the residential bullish run, which is driving forth this entire real estate today market.
Okay. Rahul, your take on this?
One of the significant, role is being played by the GCCs coming into India, and we see that story. For next at least 3 to 5 years, we see that story bright and shining. And the fact that there is just not one set of GCCs or one category of companies coming into India. There are a lot of there's a lot of variance there. Like I mentioned earlier, a lot of semiconductor companies are coming into India. A lot of tech firms are coming in. Now with AI, now a lot of AI would be coming into India. Even on the manufacturing side, if you see, there are multiple cities who are offering, a lot of diversity to these GCCs, and they are setting up their shop. I certainly see that the commercial real estate is in a very safe hands. The way it's growing year on year, I see it's going to be in double digits for sure, and upper side of the double digits is what I would say. And I see that as a success story. This is a very good time for somebody to invest. This is an extremely good time for even the large developers to look at tier 2 and tier 3 cities and make some investments there. But if you talk about individual investors through your forum, I would say it's a brilliant time. If you can, pick up spaces, you can pick up floors. Uh, you would always see a good return on that. So, I mean, next couple of years are absolutely, absolutely bullish on that.
So, viewers, here it is. Commercial real estate is a story that is here to stay. It's only going to grow from here as India growth story continues to march ahead. Real estate being a significant contributor to the growing economy in terms of percentage of GDP. Commercial real estate would also continue expanding. Our panelists believe that tier 2 towns are an interesting opportunity at this point of time for investors who are seeking decent returns, in fact, double digit returns to happen. Commercial real estate itself is likely to grow at higher double digit figures. All these things bode very, very well. We are seeing a current wave of development driven by infrastructure and GCCs and a lot of other initiatives coming in. Emerging opportunities will come through the government push on semicons and AI and technology driving a lot of future demand. A lot of these things bode very, very well. So if you are looking at investing, time is now, time is right. We'll continue doing such informative shows for you. Keep watching MBTV and the Property Show. And don't forget to like, share, and comment.